Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend, all. Ira Epstein of Linn & Associates with your metals market update, and this is for the weekend edition on Friday the 13th, 2017, just after 2 p.m. Central Daylight Time. Yeah, we're still trading, but you're pretty close to where the settlement prices are going to be for the weekend. Now, what we saw over the weekend and what we saw today was President Trump step back, decertify, if you will, the treaty with Iran. It now goes to Congress. He put on the sanctions list the Iranian National Guard, but did not label them a terrorist organization. Now, there's a difference in those two steps, all right? One step, he can freeze bank accounts, do other things to it, but he hasn't called them a terrorist organization, and that was the wording that is key. We'll see if Iran pulls out of the deal. They said if he labeled the Iranian National Guard, I'm talking the president of Iran, they would step out of the deal. He stopped short of that, which I'm sure made our allies happy. Now the question is, in 60 days that remain to see if this deal can be fixed, will there be negotiation? As we understand it, what's really likely is the original deal stays in place, and if Iran will negotiate, there'll be a side deal to the original deal to put on it what the president wants and maybe what some of our treaty partners want. If we don't get anything we want, well, then the question is, does Congress just sign it as it is, if you will, and it stays in place? You got 60 days being up in the air. Today, we heard again from North Korea, and again, they're talking about missiles in Guam. It's getting very little play because so much of us no longer care as long as nothing falls on land somewhere. I'm not sure they are going to shoot a missile or not. And I think we all realize warfare is the last thing we want. Why did this come out today with North Korea? Well, there's supposed to be joint military exercises next week again, South Korea and the U.S., so logic. All right. By the way, one other thing. Do you honestly think North Korea is going to do a lot while the Chinese Congress meets next week? And that's going to impact all the metals. They start their meeting. They meet every 5 years, and they set what China is going to do. So now the question is, where does this put everything? In the gold market, the bias is up. You're over the 18-week average of closes. All you need to do to get an uptrend going is take out this week's high, which we're just about at. On a monthly basis, that number, as you can see. When we're going to get to a weekly chart, as we get to the bar chart, you'll see how that plays. But I'm going to call the weekly chart on a closing basis strong, and we've had a correction that's carrying back up. We're still, please remember, $50 away from the high that we made earlier at the end of August, September. But you can see what's happened. You've pulled back, and now you're getting a bounce in the market. What the trade would not want to see is getting under 1260.40 on a weekly chart. The pattern is one of a lower low and a higher high. That is certainly not a trend. I think you could argue that for the time being, we've seen a trade bottom low, and that trade bottom low came in right against this 18-week moving average, which is what the market's done in the past. That becomes a key number, as has the 100-week moving average, and prices are over that. Resistance, if the market's looking above the market for one of the points, one of the probable numbers, if it can get there, is the upper Bollinger Band. Why? Well, what you'll see if you go back in time is Bollinger Bands, an algorithm it is, that is designed to keep the market trading within those bands 95% of the time, not 100. There'd be no point in having it on the chart. You want it to be able to get up to the top or the lower band, which is often considered a resistance or a support zone in the market. So in terms of resistance, that is one of the numbers. I don't see any other key moving averages above the market. And momentum, which had been working down, is trying to get now and turn back up. You'll know it turns up when the red line gets back over the blue. It hasn't quite done it, but it's also no longer pointing down, so that's important. In the gold ETF, it's just like the futures. It too made the lower low and the higher high. Momentum is now started to go sideways. Resistance back at 127.60, so about $5 higher. The gold miners are in the uptrend. They have the pattern of higher lows and higher highs. Their momentum down is flattened out. If the market can add more to the rally, their resistance points around 25.05. Their support zone in this is 23.05. The trend is broken. If the market gets under 22.81, it would give you lower highs and a lower low. In looking at the weekly gold ETF, if you took out 119.78 on this current pattern, you'd end up with lower highs, lower lows. That would be bearish as well. And on futures, I've said it already, if you took out the 1260 level, that can become problematic. On the silver chart, the silver fell down to the combination of the 100-day average at 1692 and the, did I say day, the 100-week average, and the 100 and the 18-week average at 1682, let's call it. Momentum is turning up. The bias is up because you're over that 18-week average. Now, if you look at the daily charts, I've been pointing out during the week, you were up to the 200-day moving average of closes, and that became a battleground today, but you are extending, and if the market can rally, the 1806 level comes into play. The strong market has been copper, and we saw today some of the facts come out that September copper imports in China went up 26% over a year ago. Now, they were sort of sluggish from January through September, but they've picked up in the recent months. You're seeing that in copper pricing, which has all of a sudden from mid-September been picking up. Could be a lot of reasons. Could be that people are stockpiling before the Congress session begins in China. It's an important session. They lay out their framework for their next 5-year plan. But any way you go about the chart, you got higher lows, higher highs, you're working higher, momentum is up. 320 is your next resistance point if it continues up there. In the platinum market, you had a nice correction in the market, and the question is, has it run its course or not? I can't answer that. It's got a higher high and a lower low, so there's no trend. The bias still remains down because you're under the 18-week average, and that becomes a resistance at 948.80 along with the 100-week average at 968. So it's certainly not as strong as the other charts are looking. Momentum, well, it had gotten itself down. It's trying to turn up, but it's not convinced everybody, or me maybe is the right word. And where the strong market lies has been in the palladium, but has it gotten to the point where maybe it's ahead of itself because even as this market has trouble staying over a Bollinger Band top, that often becomes a resistance point, and that number is 988.80. You're at 987, and you got to the week during the week to 993.75. The trend is up, momentum is up, bias is up. You've hit an upside target, and that's the best way to look at that. In the dollar index, the resistance became the 18-week moving average of closes. Now, you can see that this market had downside momentum all locked in, and when it finally lost it right here, and that was the 29th of September, the goal becomes when you lose that for momentum to get back possibly to that 18-week moving average of closes where it should encounter resistance. It went up this week, rather last week, again challenged that number this week, and it's under it. So we have a confused market. We have momentum still pointing up. The trend is up, but the bias is down because you're under the 18-week moving average of closes. I put it together, and I write about it like a madman in my market research. Now, I say 20-day trial. That's 20 business days. Let's call it the way it is. You're going to get a month's access to what I do. And if you've already tried that, you know it's only one time. Go subscribe to it. You spend more on your Starbucks coffee each month than you're going to do on this. Give you an example. If you have a trading account with us, it's $40 every 30 days. If you're a non-account of ours, don't trade through us, you can get my research. It's $60 every 30 days. And if you've never tried it, it's free for the 22 business days, which if you think about it, it's 30 calendar days. I start you off in the morning. That's why I have a coffee cup here. I really have the coffee right there. I'm drinking it, and I'm walking you through what I see for the markets for day trades, for position trades, idea trades. Am I going to be right on all of them? Here is the guarantee. I will not. Absolute guarantee. I will be wrong. It's just the way it is. But my idea isn't about being wrong. It's throwing out the best ideas I know to get you on your own ideas. You may not like what I'm doing. What if you're bearish and I'm bullish? What if you're looking to be bearish and I'm confirming the bearish reasons why? It goes a whole host of ways. The idea is to give you some ideas. So you take that, and then I take the video and I put it together with writings that I do. And those writings are a synopsis of what I see in the markets. I give you the whole day's print. I write 2 reports a day minimum, Monday through Thursday. And on Sunday night, I start off again so that was the markets open for the Sunday trading. You're there with ideas from me and what's happened over the weekend. I even have an oral update if you'd like to hear it. A lot of people want to hear the oral part of it, and you're able to do that. So this is what the written update looks like. I start off with the synopsis of everything. And then in red and blue, you'll see that I put in actual buy and sell ideas that get in there. And you live by the sword, you die by the sword. But I'll give you the best I have and the reasons for it all through there. I think you'll find that it's a neat way to look at the markets. And what do? Get you going for your trading. So to get this, you can either call my staff. They'll get you hooked up right away. If you're looking to do it over the weekend, well, you can always go to our website and under research. If you're looking to subscribe, it's there. If you're looking for a free trial, you'll see our carousel of free offers. Click on it, and away you go. You hook yourself up. Same thing here. If you're looking at me on YouTube, there's an icon there. Click the forms for that. And underneath us on many websites says, click here for Ira's free offerings. Take advantage of it. I'm Ira Epstein, and I will see you all come Monday.